And good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, November the 6th, 2023. I am going to start here with the NASDAQ, but first I just want to say that I am going to be presenting an alternate count tonight. And my preferred count remains as I presented last night, in that I am looking at the decline off of the high, the July high, which completed that primary B wave. I'm looking at that as the intermediate first wave down, and it was a diagonal triangle. Now, I know it's not perfect, but it actually did not break any of the rules, and everything kind of followed through for as far as a diagonal goes. It's not a super clean diagonal, and that's been a kind of a problem, but I am using that as my preferred count right now, and that we have completed at that 14,140 low, intermediate wave 1, and we're in intermediate wave 2. Now, intermediate wave 2 should take some time to unfold, because what we're looking for is a minor degree ABC, and A up, B down, B and C up. Now, with that in mind, it's going to take a little bit of time and likely even out to the end of the year. So now let's go in and take a look at what kind of now has transpired, which is sitting underneath, which is why I am going to present the alternate count, because I'm getting a lot of one-liners from comments about, oh yeah, well, let's see what you got to say when we go to new all-time highs. Let's oh, you're this, you're that. This market's going to go to new all-time ATH, new all-time highs. And I don't disqualify the possibility that that's what the market can do, but I do believe that it's going to do it differently than what people are suggesting. And the primary reason behind this is now what we're reading and what we're hearing from financial media is that the Fed is done hiking rates. No more rate hikes. And that is not true. What was said by Fed, the chairman, Powell, at that meeting in his press conference was that they were pausing, and they may pause in December, allowing for the rate hikes that they've done thus far to further show evidence of inflation slowing down, of them starting to reach their target. But he did not say that I and the Fed, we are done raising interest rates. What he said is he leaves open the possibility or the potential for additional rate hikes. You can interpret that any way you want, but to me, it doesn't say that he is done. Fed's done. We're not raising anymore. Let's see what happens. So, in turn, what that then produced, even the hedge on whether he's going to, or the Fed will raise or not raise again, brought about a massive interaction or a massive reaction from the market. Now, mind you, if you also do a little bit of research, you'll realize that there's been like $5.2 trillion sitting on the sides waiting to come into the market. Well, they just got the best news that a lot of people think they could have had. I don't think we've seen $5.2 trillion come into the market, but we're seeing large sums come back in and being put back in. Quite frankly, a lot of that is going into the Magnificent Seven, or the high-flying, the high-tech stocks, and some other, ancillary numbers. But primarily, we've seen a lot of it go into. We did see a lot of mid-cap action. Got to be honest, we did see that, but nothing out of the ordinary for the wave pattern that is actually supposed to be in force right now. So I am going to present an alternate count, and I'm not by any means saying this is what is in force right now. But I think in fairness to the ongoing conversations with here on YouTube, that I need to present this for those that really do not believe. They think that the low that we reached at 14,140 was much stronger and longer lasting, and that we may make new highs above the July high. And now I'm going to show you how that is a possibility. Under the preferred count, no. A wave 2 cannot exceed the starting point of wave 1. So under the preferred count, I would not be looking for a move above 16,251. Should it occur, this is the alternate count that A suggests and B allows for that to occur. So under this count, what I have is there's the high of intermediate wave C. I'm leaving that primary B there for right now, because that's where it sits for my preferred count. But what we're counting out then is coming off. We're counting an ABC down. So minute A, minute B, minute C, minor wave A, minor wave B, ABC, minor wave B, 1, 2, 3, 4, 5, C wave. And that, if these are minor, we go out because that's the next level. I'm a next degree. I am very satisfied with the count in terms of being an intermediate degree ABC up. So if primary B is still in progress, then what we've just completed is an X wave. Now, X wave is intervening. So it's a double ABC. So in other words, now what we get is an additional ABC structure of intermediate degree. So we're going to see a minor ABC, that's going to be A, intermediate A. Then we're going to get a minor ABC, and that's going to be intermediate B. Then we're going to get minor 1, 2, 3, 4, 5, and that's going to be intermediate wave C, the second round. Now, Fibonacci-wise, where can that go? So that what I tend to do is I take a look at the entire distance covered. So I'm going to put up what are going to be extensions. So I'm going to compare the second ABC to the first ABC. Now, they do not have to be equal. So the first ABC was X amount of points, because it went from the October low, October 2022 low, to the July 2023 high. It was a very big move, a very big move. I believe that October low, according to the December contract, was 11,081. And we topped out at 16,250. So, it's quite a large move. So if the second ABC, so we don't have any rules in terms of like in an ABC, the second ABC has to be X of that first ABC. At least I've not found any. I'm going to go back. I'll look again. But in my calculations, if the second ABC is 38.2% of that first ABC, we're going to top out and finish at 16,115. That high, again, 16,251, right? That's the high for this intermediate wave C and the primary B wave. If it comes in at 50%, then we're looking at a move up to 16,025. Now, if we go above that level, we're now moving into irregular B, because the all-time high right now for the NASDAQ is 16,768. And 50% comes in just down below it. 62% comes above it at 17,335. Then what I also am including, if it is irregular, what are those readings? So that then I just take retracements of the entire ABC off of the October lows up to the July high. Irregular, the first marker comes in at 17,472. And that is the 1.236. The next most common is 1.382. That's 18,226. Now, these are just as a technical reference. Some absolute glorious things have to happen within the economy and have to happen around the world for this market to just keep on pushing until we're at new all-time highs. You have to consider that the economy of the United States has to totally turn around, and literally, and I'm not joking, the Fed literally cannot raise anymore, and they have to start cutting. And I would say they need to start cutting in that December meeting, because something needs to feed this rally, because this buying spree will wear off. And there again, if there's enough going on, even within the economy, that truly suggests, this could turn on a dime and just sink as fast as it went up. So again, I'm presenting a technical picture. That is the technical picture, the way that it goes. Now, under what I do have up is that, and I'm going to take this guy off without changing the whole count. I'm going to take this guy off, right? So what we have here is, again, I'm just going to put up our fibs for, again, leaving this as the finishing point for primary wave B. And we have a 1, 2, 3, 4, 5 intermediate wave 1, looking for an intermediate wave 2, which will come in an ABC. And what we got going on is we're just looking for retracements. And what we have is we just now got just above. We got just above. And I'm on the daily. Let me come down to that hourly chart and we can see it more cleanly. We just poked our nose above 15,195. In fact, we closed nicely above it. We got solidly above it with a high of 15,211 today. So was it? No, it was a little bit higher. 15,257, excuse me. So now we're counting an A wave. How we want to do that? Because look at how it starts. And this actually could be a very ugly but doable, another diagonal in terms of a first wave here. This was coming down. This could have been going up. And so this could be 1, 2, and then if we're doing a 5-wave A, okay, which would suggest a zigzag for this ABC, then we have 1, 2, 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. And this would be the 4th wave. Now, this is the other thing that kind of like really presents a challenge, because our pullbacks are very, very shallow and small. And if we're counting this out, and that's going to have to be a 4th wave, then we're looking for that 5th wave. And actually, it could be, then we got to start trying to connect where we think all of this can go. And that becomes very bizarre because of the shallowness within it. Because I could probably 1, 2, 3, 4, 5, as strange as it is, and call that wave 1. And now if I'm looking at this being a 3 and that's a 4, or anywhere in between here. Is this 3? And this is a 4 coming out to here, but not, because that's the low. So we got a lot of challenges as to what we can do. So I just keep bringing it down. And I look in here to see, well, okay, A, B, 1, 2, 3. 1, A, B, 1, 2, no, 3, 4, 5, maybe A, B, or 1, 2, 3, 4, 5. So we're getting decent. The rallies are turning into 5. The declines are remaining 3. So if that's going to be the whole thing, then we are continuing to progress along, but as to exactly where we are, and then where I can pinpoint where we might get a larger pullback is very difficult. It's very difficult. So you can do a lot of internal fibs to kind of pick where it might come above all of this. But as to exactly how deep, we're not even getting close to a pullback. Even today, expecting possibly we could have gotten back to the hourly 50 simple moving average, which would have been 51.05. We got down to 51.36. And while it was happening, I was like, yo, and it just kind of dropped, and it was great trading, great day trading. But in terms when you pull it out and you take a look at this chart, you're like, it's just minuscule compared to the buying. So it shows you the strength of the buyers right now, the strength of them moving into the market nonstop. Because this essentially, this had started on Thursday, carried through on Friday, and then picked up again over the weekend, right? And then all last week, we just powered higher. And now we're starting again, like we did it Friday, and here it comes Sunday, kind of just started, and then Monday, we powered on the opening, dropped down, came back. So I'm thinking that this was 3, 4, and 5. Now, is it of a C wave? Which makes it A, B, C, A. So, and do I have to do this on a minor degree? And this is going to be the first intermediate degree A? It may be, and it could be that fast. It could be that fast. Now, again, if we're just in an intermediate wave 2, then it's going to be a minor degree A wave, and that fits. We get a minor B wave down, and again, if I'm looking for a little bit new high above that, that's where I would place the marker. But you'd be looking at putting a fib from wherever this completes to wherever this end completes. So I'm going to leave it right at that high so we start to get indications. B waves, what is the most common? 50%. You're looking at a pretty nice drop, a clean drop back down to here, or 62%. A, 3 waves down to there to the B, and then you get a C wave, 5-wave C rally. Where is that going to take us? Well, we got a couple of markers up here. 15,445, wave 2. Yeah, right. Again, let me open this up and bring it out a little bit. Go one more. Right. We're coming down. There's the end of wave 1. And 618, 15,445. Let me go to the 4-hour chart. We look at it a little bit differently. I'm going to open it this way. Here we have, I know this is marked as an X, but now we're putting it back on the preferred. That's an intermediate wave 1. Intermediate wave 2, yeah, it can get up to 15,800, but I'm looking for an A, a B wave, and then a C wave taking us up that high. Or even if A wave A wants to get this high, we've got further to drop, because I'm still going to be looking for 50 to a 62% retracement of wherever this rally gets to put in a B wave, and then an additional C wave rally, which should resemble this, to break whatever the high is here and keep going on up. And then we're dealing with this level and this level. What I would not be at right now, again, as a second wave, I would not, and it cannot break 16,251.50. Cannot break it. If it does, it's in violation. It's not a wave 2. And this was not a wave 1. Then we're over to that alternate count. Okay, so that's the layout right now. Now, how do you want to trade this? I suggest, so for me, I cannot suggest or make any recommendations. I don't do that. But I'm a day trader. So I'm playing every one of these little moves. And so, the goal for me is to make money every day, no matter what the market does. But if you're positioning to this, then I think there are different ways. You could do option spreads, or you can just straight up buy the index or buy the spiders or buy, TQQQ or the Qs. There's options. You just buy an option and you just, do it. You can just be long an option. You could just be long a stock. And you're going to participate in this rally. But if you're using the indexes and you're just long an index, it's a tough one. It's a tough one because these moves, even on a one lot, folks, can be 700 or 1,000 or 1,500, depending on the direction, right? If you're shorting and thinking that you're going to get a correction and it doesn't, and you're hanging on, you're going to get killed. If you're long and you're waiting for it to pick up again, and if you got enough money, you've just made a fortune. If you've been long this whole rally, you're up sizable amounts of money, and I mean sizable. If you got long down here, I mean this whole move, folks, is over 1,000 NASDAQ points, and it's $20 a point, so it's $20,000 move. I'll wait for somebody to comment and say, "Yeah, I caught that long." Bravo. Now, moving averages, you got this 20. Look at that 20. Look at it. That alone tells you we got more because it's now parabolically just hooking and riding this entire strength of this rally. The 100 and the 200 and the 50s now made its crest, or excuse me, rounded its bottom, and now it is rocking higher as well. While the other two, they're just starting to go flat. So I'd be looking for the B wave, then I'm going to get a C wave. Over in the S&P, it's the same deal. I'm also presenting the alternate count, and actually it's exactly the same. Now here, the question was, and I'll show you because I still have my preferred count is on the SPX. So one of the questions that I got was that in a diagonal triangle, wave 5 always has to be longer than wave 3, and that's not correct. The rule states that in a diagonal, in a leading diagonal, which is what this would be, in that diagonal triangle, wave 5 ends under, exceeds this, in this case, exceeds the low, or if it's a diagonal going up, exceeds the high. So exceeds the completion point of wave 3, and it certainly did. Wave 5 is not the longest wave, but that's not what the rule states. The rule states that wave 5 ends beyond the completion point of wave 3. So it's longer by ending below. So it doesn't say it's longer. It says it ends below wave 3 or beyond wave 3. So that it did do. So here we are, SPX. This is my preferred count. But under this count, this market cannot go above 4607. That is the starting point for the intermediate wave 1. Intermediate wave 2 cannot go beyond it because then it's not correcting it. But we have this marker right here, and that is 4542 approximately. Now, if it goes above that, the thought process is that we go to new highs above the July high. If that is the case, then we go to the alternate. Again, here we have it. There's the C. I moved the B out of the way. But I'm very satisfied with the intermediate degree ABC up to the high, which again, on the futures basis is 4684. Believe so. 46, let me get it right to it. 4684. That's the high, the July high. So here we go. A, B, then we count out that C wave, right? So these are minute, these are minuet. And then we finish a minute wave C, a minor wave A at ABC up, minor wave B, 5 waves down, minor wave C, intermediate wave X. So we're in a the next ABC, intermediate degree ABC up for the second ABC of a double. So we're still in that beginning process. Bring it down. We take a look at it on the hourly chart. And so again, this one a little bit clearer that the possibility we got 1, 2, and then 1, 2, and this could be a running 2. If this is going to be wave 1, this could be wave 2. Not that common, but this has been shooting straight up. So it gets a little bit weird. But see how we got a nice ABC here. So even I'm going to count this at 1, 2, and all of this is going to be wave 3. This could be 4, where the NASDAQ didn't give us that nice clean move. But we did get it here. Nice and clean. So once again, I'm thinking that maybe we got, even if I do this 1, 2, and then I get 1, 2, and then I get 1, and then this is all going to be 1, 2, 1, 2, 1, 2, and then say, what is it then? Right? Everybody goes, well, you got too many 1, 2s. Well, I'm not sure how to count it other than this is 1, this is 2. So we get kind of that diagonal into wave 1 again. This is 2, and then 1, 2, 3, 4, 5, 3, 4. We get a 5, and then we pull back. That could be A. Now, whether it's going to be intermediate wave A or minor wave A, it's just going to be an A wave. We're going to be looking for a B wave to come back. Now, I'm putting wave 1 all the way up to there. So let's just kind of, say that that's the case. And what are we going to do? Now we're going to want to look for, yeah, I think I got this right. Oh, we're going to put it up here, and we're going to look for what could wave 5 be. So yeah, we've got some strong potential that we're going to put in a decent rally again. 44.20, 44.55. If this was wave 4, and this did complete wave 1, that didn't work out right, did it? No, let me do that again. I'm going to go from there to there to there. Yeah, that is the same. It just looks so strange that it doesn't. It just kind of surpasses and just goes right up. Okay, but it is the same. 44.21 to 44.57, and that could be tomorrow. We'll get up there, and then we do what I would consider that would be wave 8. Then we got a B wave, and you can see that a B wave likely has potential to come back to 4,300 or 42.40. If we're just using our moving averages, you can see in the S&P on the 1-hour chart how the 20 really rocking, but turned with the market, and the 50 coming right up here. So being on an hourly chart that the 50s come up so high, if it breaks it, we should get a continued a decent move down off of that. That much I'll give you, I believe. But again, I'm looking for that 5 so I can put in what the B wave will look like coming down. All right, so let me go out and take a look at the daily, because that's where we track a lot of the movements within our moving averages. We just, the 20 is just turning. The 50 actually got broken, but it closed right below it. So what could give it that little push up into this zone would be that the market gets through it, and that'll give it a boost. 44.21, 44.57, and then we get another. So we also have some additional labeling for where, if it would be, then I would consider it like intermediate wave A. If it got up as high as 45.08, then I'm starting to look like intermediate wave A. All right, that's where I'm going to complete it. Thank you very much. Again, what I'm presenting is an alternate view, alternate count. And my preferred count remains that we did an intermediate wave 1 down here. We're in an intermediate wave 2. Next update, Tuesday, November the 7th.